What's the significance of what the Bank of England did?
Well, they're saying, they're sort of demonstrating that they want to curb inflation. Too little, too late. You could say too much, too late at this stage, actually, because we are effectively coming into stagflation, where you have a stagnant economy but rampant inflation. And the way to deal with those two is quite opposite.
Yeah.
You know, with stagnant economy, you open the floodgates, you create more money, or, you know, make it easier to borrow. With inflation, you have to reduce the flow of money. So I think they're trying to do both, and of course won't manage it. Raising interest rates by 0.5%, I truly don't think is going to make a hugely good difference. I think people are already stopping spending. So merely increasing interest rates is just going to make it harder for people with mortgages ultimately, and those that have to borrow, basically.
Well, we have the worst inflation basically since the 70s now, but we don't, I mean, interest rates in the late 70s hit 17%. You know, when people are going, ooh, over 1.75%, there's a long way to go still, isn't there?
Well, there really is, and it does show that the problems that we have created for ourselves over the last, well, at least 15 years, I would say, because we have had historically, well, nothing, literally nothing interest rates, plus quantitative easing, money printing. So we've had about the loosest financial situation you could possibly have. And in that environment, we've had rocketing house prices, which is certainly partly because of, you know, supply and demand, but primarily because of incredibly cheap money, to the point where most millennials and Gen Zers can't afford a house of their own. And we also had an extraordinary number of businesses that have started and not made any profit at all, but have been able to do it because they've had all this cheap money. This is reversing, or it seems to be reversing. How long it's going to last, I don't know, because we have the war in Ukraine, we have a recession potentially, so they might actually bring interest rates down again. We really can't know at this stage.
On the continent at one point, they were actually paying you to borrow money.
Yes.
There's a huge psychological gulf between that and 17% in the 70s.
Yeah.
Now, one thing that has changed is that a lot more people are on fixed-rate mortgages, but those fixed-rate mortgages aren't forever.
No, exactly. And you've got a lot of people whose mortgages will be finishing probably this year. 75%, three-quarters of mortgage holders have a fixed rate, which is great. Now, if you've got a 10-year rate and you've just, you know, started it, well, good for you, you'll be all right. But a lot of people, yes, in the next 12, 24 months, they will be needing to remortgage. And yeah, it's going to be harder at that point, definitely.
You mentioned that stagflation it has a completely different strategy from inflation. We're also in a slightly weird situation more broadly here, because the government massively intervened in the economy 2 years ago and basically killed it stone cold dead. So is this actually, do traditional theories of stagflation and inflation apply when it's as artificial a situation as this one? Well,
I think it's a very good point, because not just in this country, but, you know, across the West, we have central bankers that it seemed to my mind, have just messed things up, essentially. Because, I mean, I remember in 2008, I thought at the time, oh, well, they're bailing out the banks to look after everybody. But actually, it wasn't, they shouldn't have done that. What we should be doing is letting the banks fail. And we do have a broken banking system, just to, you know, add to our joys. We do have broken banks, and they need to be allowed to fail. But at the moment, certainly over the last, you know, 10, 15 years, they haven't been allowed to, because we have central banks, bank of last resort. Anybody's got a problem, oh, here's another few billion, you know, that'll keep you propped up. And so you have essentially zombie banks. We are banking in many cases with zombie banks, and that is not healthy in any way, shape or form.
Well, that begs, well, and the other thing is that the type of person who becomes a central banker these days, I think, has changed since this. I mean, Mark Carney was governor of the Bank of Canada, and that wasn't big enough for him. So he then became governor of the Bank of England, and that isn't big enough for him. So he's now sidekick to Klaus Schwab at Davos or what. So his world plans don't seem to take into account the lives that ordinary citizens lead.
Absolutely, yes. And with inflation, certainly, and recession, it is the lives of ordinary people that are being immediately impacted. And inflation is what we, as the consumer, pay for the sins, if you like, of our masters, of our lords and masters. Inflation is entirely self-created. It's created by governments. And we, the consumers, the workers, we end up paying for it.